Hi, my name's Dave, and in this video we'll be looking at calculating earnings per share. More specifically, we'll be looking at calculating basic earnings per share, or EPS, including a bonus share issue. In this case, we have an after-tax profit for the year ended 30 June 2002 of £18,165,700, profit attributable to non-controlling interests of £285,450, and a profit attributable to members of the parent entity of £17,880,250. At the end of the previous year, the basic EPS was £6.20. At the start of the year, there were 2.5 million ordinary shares outstanding, as well as 600,000 8% convertible preference shares. These were issued at £1 each and classified as equity. On the 1st of September, there was a 1-for-4 bonus issue, which meant that existing shareholders received 1 bonus share for every 4 shares they held. And on the 1st of June 2002, an additional 100,000 ordinary shares were issued. IAS 33 is the standard which deals with calculating EPS, and paragraph 10 tells us that basic earnings per share shall be calculated by dividing profit or loss attributable to ordinary equity holders of the parent entity, the numerator, by the weighted average number of ordinary shares outstanding, the denominator, during the period. We can set that up as a formula with profit or loss as a numerator and ordinary shares as the denominator. We're going to look at each in turn, starting with the numerator. According to paragraph 12, for the purpose of calculating basic earnings per share, the amounts attributable to ordinary equity holders of the parent entity in respect of A, profit or loss from continuing operations attributable to the parent entity, and B, profit or loss attributable to the parent entity, shall be the amounts in A and B adjusted for the after-tax amounts of preference dividends, differences arising on the settlements of preference shares, and other similar effects of preference shares classified as equity. So turning back to our example, for calculating earnings for the EPS calculation, we start with the profit attributable to the members of the parent entity. As the preference shares in this case were classified as equity, we deduct the dividends from this profit figure as required by paragraph 10. The dividends were 8% on 600,000, which equals £48,000. This leaves us with earnings of £17,832,250, which is the numerator value for the EPS calculation. Keep this in mind for later. Now that we've dealt with the numerator, it's time to move below the line and check out how we calculate the denominator. Paragraph 19 tells us that, for the purpose of calculating basic earnings per share, the number of ordinary shares shall be the weighted average number of ordinary shares outstanding during the period. But depending on how the shares were issued, it's not quite as straightforward as that. And that's because paragraph 26 requires that adjustments be made when there are events, other than the conversion of potential ordinary shares, that have changed the number of ordinary shares outstanding, without a corresponding change in resources. A good example of this is a bonus issue, because the number of shares outstanding has increased, however there was no investment by the shareholders. So what does this mean in practice? Let's set out the timeline for this example. At the start of the year, there were 2.5 million shares outstanding. On the 1st of September X1, there was a 1-for-4 bonus issue. Based on 2.5 million shares, that's an additional 625,000 shares issued. On the 1st of June 2000X2, an additional 100,000 ordinary shares were issued, which means at the end of the year, there were 3,225,000 ordinary shares outstanding. The easy thing to do would be just to average the opening and closing shares outstanding. But as you can see from this timeline, that wouldn't take into account when and how many additional shares were issued. We're going to look at this graphically first and then work through the table. The first block of shares was held for 365 days. So we multiply 2.5 million by 365 divided by 365, and that equals 2.5 million. The second block of shares was issued on the 1st of September X1, which means they were on issue for 303 days. Taking 625,000 shares and multiplying by 303 divided by 365 gives you 518,836. The third block of shares was issued on the 1st of June 2000X2, which means they were on issue for 30 days. Taking the 100,000 shares and multiplying by 30 on 365 gives you 8,219. Adding all these together, you end up with 3,027,055 shares. However, this isn't quite right, and it's because of the treatment of the bonus issued by IAS 33. Paragraph 28 requires that for a bonus issue, we have to assume that the issue occurred at the start of the period. So if we adjust the second line so that the 625,000 shares are an issue for 365 days, not 303 days, we end up with 625,000 for the weighted average for those shares and 3,133,219 for the overall weighted average. Looking at this another way, we can build up the following table. For each set of shares, add in the periods of time they were on issue until the next set of shares was issued. Then work out the days for that line. For example, the period for the first line begins at the 1st of July X1 and goes up until the day before the bonus share issue occurred, the 31st of August X1. That's a period of 62 days. We then add in the number of shares for that set, so in this case 2.5 million, and add this to the cumulative column amount. Because there were 0 shares before this ordinary block, that's 2.5 million as well. We then need to add in the bonus adjustment factor. This is calculated by dividing the number of shares held after the bonus issue by the number of shares held before the bonus issue. As it's a 1 for 4 issue, it means that there will be 5 shares on issue, 4 plus 1, after the issue, as compared to 4 beforehand. This equates to a bonus adjustment factor of 1.25. The final column, the weighted average number of ordinary shares, is the days in the period divided by 365, multiplied by the cumulative shares in the row, and multiplied by the bonus adjustment factor. This yields 530,822. This process is continued for the bonus share issue. With the exception, we don't have to calculate the bonus adjustment factor. We can assume it's 1. In this case, 273 is divided by 365, multiplied by the cumulative share amount, so 3,125,000, and yields 2,337,329. We repeat this process for the ordinary shares issued on the 1st of June X2, and this will give us 265,068 shares. We then add the weighted average amounts together, and we end up with 3,133,219 shares, which is the same as what we had worked out earlier. To calculate the basic EPS, we then take the earnings we calculated of £17,832,250 and divide it by the weighted average shares of 3,133,219, which gives us an EPS in the current year of £5.69. Because of the bonus issue, we also need to restate the comparative EPS for the prior year. This originally was £6.20, and to restate it, we divide this original amount by the bonus inflation factor, and this will give us a restated comparative EPS of £4.96. And that's calculating basic EPS, including a bonus share issue.